Hi, everyone. Welcome to our Refinitiv webinar today on the deal-making landscape in 2021. My name is Georgia Pask, and I work in sales, strategy, and execution for investment banking at Refinitiv. I'm joined by my colleagues, Matt Toole and Lucille Jones from the Deals Intelligence team at Refinitiv. Before we get started, I'll just go over a couple of housekeeping points. The first is that this session will be recorded, and we'll share the recording with you after its conclusion, along with the slides and some other relevant materials. There's just so you're aware, there are widgets at the bottom of your screen, including a Q&A widget, which we would encourage you to make use of. We'll get to the Q&A at the end of the slides, but please do submit questions at any time during the presentation, and we'll answer as many as we can, and those that we can't answer, we will get back to you post the session. There's also a resources list on the right of your screen, which includes some relevant materials from Refinitiv, which might further support your learning on the deal-making landscape at the moment. After the webinar, we'll have a really quick feedback survey, just so we can get your thoughts on topics for the future. And we really value this, so please take sort of 10 seconds to complete this. Thank you very much. Just before we get started, I'd like to learn a little bit more about our audience and your thoughts on the deal-making landscape. Firstly, if you could please let us know which function in banking you work in, and then we'll show the results of this quick poll on the screen. So we've got options for M&A, ECM, DCM, general coverage, or other. Okay. Great. Thank you, everyone, for your responses there. The second quick poll we wanted to ask was, which factors do you believe will have the most significant overall impact on corporate finance activity in 2021? And the options here are government stimulus, economic conditions, private equity or sponsor activity, or the pandemic trajectory. I'll just give you a couple more seconds there. All right, we can check those responses. Okay, so fairly evenly split between what we think are the biggest factors affecting the deal-making landscape. So I think this is a good transition into the start of our presentation. Looking back a year ago, it would have been difficult to predict the incredible capital markets boom and the record issuance we've seen over the last 12 months. Matt Toole, what's been the impact on global and regional IB fees over that period and year to date as a result of this?
Thanks, Georgia. We probably should have had all of the above selection on that last question, because it's pretty evenly matched across all of those pieces that are affecting markets. But as you said, no one really could probably have imagined that we'd be here starting off 2021 with an all-time record. And that's really going to be the theme of most of our discussion today, is just how powerful M&A and capital markets have been coming into the new year. And now that we've seen investment bank earnings for a large number of the banks around the world, we've seen the impact of that on overall revenue and how the banks are reporting, and really some major kind of records for overall activity and volume. You can see on this chart that overall investment banking fees are up 39% compared to a year ago, which is an all-time record. And it really does jump out there, the sheer kind of growth and into a new kind of stratosphere or a new range of investment banking fees. A lot of that has been driven by equity fees, and those equity fees have been driven by some very strong performance in all the asset classes, which we'll get into later, but also SPAC fees. And SPAC will be something that will make its way through many of our conversations. Special purpose acquisition companies, which have really come on strong since the middle of last year to an all-time record, and we'll get into more into that detail. We are counting all of the fee here, all the IPO fee in during the initial listing. So there is a little bit of a difference in how the fees will eventually shake out depending on the business combination. So there is a little asterisk here around the overall numbers, but from what we can tell, many of the banks are, it's probably a mixed view of how the banks are actually booking fees around the initial IPO and then the remainder of the fee that comes during the business combination. But still, we're seeing broad-based increases across the board, across all of our asset classes. So equity, near quadrupling, debt capital markets up 4%, loans up 6%, and M&A are flat compared to a year ago. The regional breakdown, I think, is also very interesting. Just the sheer, size of the fee pool coming from the Americas is that blue bar, over 27 billion from an overall fee perspective, just really skyrocketing in 2021. The interplay between Europe and Asia Pacific is always interesting. 2021, Asia surpassed Europe for the first time ever. You can see for each of the Q1 periods, it's kind of, obviously been tracking right underneath that European fee pool. But, really interesting to watch that interplay. And the European fees have really been mostly flatlined since the financial crisis. And, Asia obviously on a slow, kind of important trajectory as the fee pool continues to grow in Asia with new products around corporate bonds, equities, convertibles, and also a growing M&A, kind of part of the fee pool as well. Just to show the trajectory as well, I think looking at the month-over-month comparisons, just seeing that all of the months since April 2020 have seen kind of large double-digit increases compared to the previous months. And again, the theme will continue to come through is that many parts of the investment banking world are kind of firing on all cylinders and really driving kind of the overall dynamic of the markets across capital markets and M&A advisory. Looking into specifically to M&A advisory, one of our kind of more kind of famous slides is looking at the dynamics between the bulge bracket investment banks and the boutique investment banks, which, the story is quite well known now. The boutiques born out of the financial crisis, we estimated at some points in 2017, 2018, there were over 1,000 boutiques who were collecting fees for M&A advisory work. That number has kind of has bounced along since. But looking at the overall trajectory, you do see a bit of a downtick in the first quarter, again, based on completed deals. So the boutique advisors as a whole are taking about 38% of the overall M&A fee pool compared to the top 5 banks, which are the top 5 American banks, accounting for a third, which is the highest level since 2015. So again, it's interesting to always watch how this works, particularly with how the M&A trends are coming through. And so Lucille will take us through some of that. But I think it's really interesting to watch kind of the dynamic between kind of these two pieces and certainly where business might be moving across different client sets or industries.
Thanks, Matt. Yeah, so we're seeing that obviously the bulge brackets are increasing their market share at the cost of the boutiques. But Lucille, is there anything in the M&A landscape that explains why this is happening?
Yeah, so we've seen an incredible start to the year. Global M&A reached 1.35 trillion in the first quarter of 2021, which is just shy of the biggest quarterly total ever recorded, which was back in 2007. Coming out of the spring lockdown last year, the latter half of the year, we saw an amazing amount of activity, and that really has continued into Q1. It's actually the third consecutive quarter in which the value of deals has exceeded $1 trillion. So, really astonishing levels here. And I think the chart on the right really illustrates the scale of the rebound after it plummeted. M&A plummeted a year ago in the early days and weeks of the pandemic when, deal makers had to reassess how to get deals done. And executives were really focusing on, shoring up their own companies rather than buying other businesses. And we actually have almost another month under our belt now, coming towards the end of April. So the chart on the left shows year-to-date global M&A volumes as of last Friday. So deals worth 1.7 trillion have been recorded so far this year, which is more than double, actually an increase of 121% in value from the same period last year. And it's the strongest start since our records began in 1980, so more than 40 years. And it's not just the value, the number of deals are up 13% to a 3-year high and the second highest year-to-date level on record. So, yeah, very high level of deal-making activity here. Regionally, so if we go back to the chart on the right, like Matt said, for fees, it's always quite interesting to see the interplay between the US, Europe and Asia, and how much impact each of the different regions have on M&A now compared to, historically. And actually now US deals, they were responsible for much of the activity in the first quarter. They actually accounted for half of all deals by value, while Europe accounted for 20% and Asia 16%. We saw growth across all regions from Q1 of last year, but to varying degrees. The US, so the blue line here, it actually saw the sharpest decline in M&A last year. So a lot of big ticket M&A deals come out of the US, and these announcements were particularly affected by the downturn. But we also saw the biggest rebound in the US as well. And now 675 billion worth of deals were recorded in the first quarter, and that's a massive 170% more than the opening quarter of 2020. Deals involving targets in Asia Pacific increased 50% from last year to the best opening quarter since 2015. And European M&A increased 25% to a 3-year high of 280 billion. So Asia and Europe are seeing, less value growth than the US, but actually they're seeing a bigger uptick in the number of deals. So both regions saw number of deals increase 19% from last year, and that's compared to a 6% uptick in the US. Moving on, here's a kind of a longer look back at the M&A cycle, more than 4 decades here. So quarterly volumes back to 1980. And, often the headlines are driven by the big consolidations, the big ticket deals, which, have really been the hallmark of the last M&A cycle and have really driven that dollar figure. But the number of deals is also, a key indicator of the health of M&A, the mid-market. And you can see here the sort of, the peaks and the troughs around recessionary periods. You can see that pronounced drop in activity in the second quarter of last year, which, it brought to an end the most recent cycle of deal making. But it was very quickly followed by the rebound in the third quarter, something that, we probably weren't expecting. I remember we were discussing in Q3, we were, wondering whether this, the spate of deals that we had seen was, a resurgence, or whether it was just, a backlog after a quarter off. And then we recorded almost 15,000 deals in Q4 and followed by just under 14,000 in Q1 of this year. So, we're at very elevated levels. There were more deals recorded during each of the last 2 quarters than any other quarter in more than 40 years. So an incredible start to the year. And as I said before, the 3rd consecutive $1 trillion quarter. So interested to see whether we'll make it to 4 consecutive quarters. Now we're going back to a regional view, but this time looking at monthly activity across the different regions. Again, globally, we see M&A plummet in the spring of last year. April actually recorded the lowest monthly M&A total since September 2004, so more than 15 years. And then, M&A rebounded strongly over the summer, and things really took off in September, where we saw the highest monthly global merger total in 4 years. So far this year, we've seen very strong monthly gains over 2020. January increased 88% from January 2020, and February deal value increased 64%. And March actually recorded the highest monthly M&A total since our records began in the 1980s. And then April, we're already up 3 times the value that we saw last year. Got to remember that last year's April was, a low point. As I touched on before, the rebound in the Americas is the most striking. So here we had already seen a little bit of a slowdown in the first quarter before COVID really hit. But you can see the sharp decline in April and May. April was the lowest monthly total in the Americas since February 2009, so more than a decade. But just look at the rebound. I mean, September marked the 5th consecutive month of M&A growth. We had a bit of a dip in October, but still very elevated levels through to the end of the year and into Q1. And actually, the number of deal announcements returned too, which indicates a return of the mid-market. And as I said before, it's a good indicator of the health of M&A. The fact that it wasn't just a few large deals propping up the value. This year, we've seen huge triple-digit percentage gains every month in the Americas, and March 2021 saw the highest level of monthly M&A activity in the Americas for 21 months. A little bit choppier in Europe, but you see the fall-off and a slower rebound with some spikes in value that were generally caused by a handful of very large deals last year. Mega deals boosted September M&A figures in Europe to the highest monthly total in more than a decade. This year, January 2021, saw the best month for M&A in Europe in 4 years, and we've seen 2 consecutive months of growth since. Moving to Asia, the region was affected by the virus a little bit earlier than Europe and the US. So right at the start of the year in January, deal making dropped, but it very quickly recovered with both the value and the number of deal announcements returning to pre-virus levels over the summer. Both January and February 2021 this year, we've seen increases in M&A activity of more than 40% from their respective months last year. And then March, we see this, another spike in activity boosted by the Grab Holdings 30 billion SPAC merger just last week, which is the 4th largest deal so far this year, and actually the largest involving a non-US target. Which brings me to my next slide. So here we're looking at the larger deal size categories. So on the left, we have mega deals, which we classify as deals valued at $5 billion US or more. And last year we saw announcements of mega deals, which have really driven M&A over the past few years, drop significantly in the second quarter. Companies showed very little appetite to execute these large mergers amid such uncertainty that the pandemic brought. But then, coinciding with the lifting of lockdowns, mega deals returned over the summer in a very big way, actually. We actually finished the year with a total of 79 mega deal announcements in the July to December period, which is only 3 less than the half-year record that was set in the second half of 2007, where you see that big spike there on the chart. And the deal announcements keep coming. We saw 50 mega deals globally during the first quarter of 2021. That's more than double the number recorded during the first 3 months of last year. And in April, we've seen a further 12 so far. So, these mega deals are certainly driving a large amount of the value activity. Their combined value is a huge $678 billion so far this year, which is an all-time record. And then over on the right, we're looking at the size band just below that, the $1 to $5 billion range. And we're seeing phenomenal growth in this size category after the Q2 shutdown last year. Deals in this size category increased more than 180% by both value and by number of deals compared to last year. And both value and number of deals have reached an all-time quarterly record in Q1 of this year. Now here we're looking at cross-border M&A deals. We saw real growth in activity for around 5 years between 2014 and 2018. During this time, Chinese buyers moved quite aggressively into this space, and cross-border deals accounted for around 40% of global deal making. And then in 2019, corporate deal makers stayed a little bit closer to home. Cross-border deals started, to dry up amid trade wars and rising protectionist sentiment, and inward investments to the US and to the EU are coming under, increased scrutiny and political intervention. It wasn't the most hospitable environment for cross-border deals. We saw a big decline in Chinese acquisitions, and transactions became a lot more local in nature. So we were already seeing, a decline before COVID, around 2019. And then cross-border deal making plunged to under 40 billion for 3 consecutive months. From March last year, you can see that real dip in the chart. Those are lows that we haven't seen for more than a decade. But they returned over the summer with cross-border activity almost doubling in the second half of the year. And we've started 2021 very, very strongly with almost 600 billion worth of deals announced already, which is an increase of more than 170% in value to the highest year-to-date total since our records began in 1980. The number of deals has increased 13% too. So we're at around 4,000 deals already. So we're not just talking about the mega deals here. We're seeing strong activity in the mid-market and small cap too. Buyers in the United States are driving a lot of this activity. They alone have initiated 40% of all acquisitions abroad so far in 2021. Their cross-border acquisitions more than tripling in value from last year. Canada, Ireland and the UK are the next most acquisitive nations, followed by Japan and China. From a targets perspective, the US is also the most targeted nation for cross-border M&A, accounting for 31% of deals, followed by the UK with 11%. Now let's look at sectors. So here is this year's M&A by target sector in the turquoise, and there you have a comparison underneath each sector to last year in the grey portion of the chart. And technology is by far the leading sector right now, way out in front, both by value and by number of deals. Value is now at an all-time high year to date of 412 billion, so higher now than during the dot-com boom. Tech deals account for a quarter of overall M&A so far this year, so a huge driver of M&A. And the value of deals has more than quadrupled from this time of last year, and the number of deals are up too, so they're up 44% to more than 3,600 so far this year. So, growth in value, growth in the number of deals, not just being propped up by the large deals. We had Dell's spin-off of VMware, Microsoft's $18 billion acquisition of a speech recognition firm, Nuance Communications. Those were the big headline-grabbing deals, but there is actually plenty of activity in the mid-market as well. So tech, financial and industrial sectors, they make up the top three. We've seen a lot of activity in financials so far this year, some banks, some insurance, some asset management deals. Industrials, the takeover of Lucid Motors by a SPAC, one of the largest deals in that sector. And then healthcare. Healthcare is interesting too from a value perspective. It's the fifth most active sector, and we've seen very, very strong year-on-year increase, more than 4 times the value recorded at the same time last year, and it's the second highest growth sector after tech. Also a big increase in the number of healthcare deals, up 22% year to date. And then down at the bottom, we have consumer, telecom, retail sectors. So consumer and retail perhaps more negatively affected by the pandemic, still adjusting to the post-pandemic world. Maybe deal makers and boards are not ready to make major moves in those spaces just yet. But we're seeing growth really across every sector. If you look through the chart, you'll notice that each and every sector has seen growth from last year, with 8 out of the 12 industries seeing triple-digit % gains from last year. So 8 out of the 12 have at least doubled in value. And here is a list of the largest deals so far this year. So this list, very emblematic of the year so far. We have the prominence of the US. Half of the top 20 deals involve a US target. And the sectors that featured very highly on the last slide are the ones that are, in this list. We have, a lot of tech, financial, industrial. Cross-border deals as well. 4 of the top 5 deals are cross-border in nature. And we're starting to see some SPACs pop into the list too. Matt touched on SPACs earlier. We're going to go back there in a few slides' time. So you can see here, Grab Holdings, Lucid Motors, but more about SPACs shortly. Another thing I noticed when I look at this list is that the 9 of the top 10 deals were announced sort of middle to end of March through into April. So it doesn't look like things are, cooling down in terms of large deal announcements. It's, more like they're warming up. The deals that really took us over the $1 trillion mark for the 3rd consecutive quarter, we're continuing to see these kind of large sized deals. Already 12 mega deals have been announced in April, which has boosted April M&A to just under 340 billion. And these figures were run a week ago. So, we have another week under our belt. So interesting to see how long this can continue. On to private equity. So private equity-backed M&A has been a very significant story over the last 3 quarters. Just the sheer number of transactions that you can see here on the chart, almost 3,000 PE-backed deals during the first quarter. It's an all-time record. From a value perspective, we saw more than 250 billion worth of deals during Q1, which is the highest first quarter total on record. And it's not far off the record quarterly total, which was recorded 2007. You can see the spike back there. Private equity accounts for 18% of overall M&A so far this year, which is the highest share in 8 years. So, private equity acquirers have been very busy post-pandemic. Looking at fundraising, 2019 was the biggest fundraising year for buyout firms on record. And 2020 was only, slightly weaker. So there's capital to be deployed here. And as companies decide what to do post-pandemic, maybe adjusting their business mix or selling non-core assets, private equity is, sort of a natural buyer here. And they certainly have the capital available to make these moves. Again, interesting to see whether this continues into the summer. I think we're going to go to a quick poll now. So, Georgia, over to you.
Yeah, thanks, Lucille. And it is very interesting to see what's been driving M&A year to date in terms of deal sizes, industries, private equity. We'd like to get your thoughts now on what is going to dominate M&A in the next quarter and in the rest of 2021. Will it be mega deals? Will it be industry-driven transformational M&A, in-market consolidation, geographic expansion, or restructuring and retrenching? We'll just give you a couple of seconds to make a choice there. Okay, let's see how that looks. All right, so industries people think are going to continue to drive M&A, and we can follow up these results in our next webinar, certainly, to see if our predictions eventuated. I'm going to hand over to Matt now, because he is going to delve deeper into the hot topic of SPACs.
Do you want to take the M&A side?
Shall I? Yeah, I'll take that first. So, yeah, SPACs, a big thing that we saw started to emerge towards the end of last year was SPAC IPOs, which Matt will talk to in a moment. So SPACs are shell companies that raise money by listing on the stock market with the sole purpose of finding a target and taking it public. And what we're starting to see now is this activity trickling into the world of M&A. We've just had an all-time record month for SPAC combinations in February, which took the first quarter total to 110 deal announcements worth more than 200 billion. So we've just had a record quarter. You can see the activity, high-level activity over the last few quarters there on the right. SPAC combinations, they've been a huge driver of M&A activity right now. We saw earlier how they're popping into the top deal list. So we had Grab and Lucid Motors. These SPAC deals, they're accounting for 17% of this year's M&A announcements globally, and around a quarter in the US. So really a huge driver of M&A. And Matt, a big theme from a capital markets perspective too.
Absolutely, it's been fascinating to watch, kind of since the beginning of or the middle of last year when kind of the SPAC IPO craze began, moving into 2021, where we broke the full year record in just the first 10 weeks of the year, as you can see on that IPO chart. I think with anything like this, with just the sheer volume and obviously the investor reaction and a lot of kind of now more prolific SPAC issuers and SPAC companies and sponsors coming into view, there definitely has been a lot more focus on them. And so, that has certainly brought a change to the overall market for the listing side of things as we moved into April. We've seen just 11 SPACs price in April compared to nearly 120 in March. And so, a complete freeze, I would say, of that market. I think as the regulators, the SEC and others look at, some guidance for the investment community as well as the underwriting community and a lot of the banks that have moved into the space. We do have 170 SPACs that are sitting in the pipeline who have filed to go public and have not gone public yet. So there still is a very broad collection of SPACs that could continue to come kind of with new guidance, with new financials, potentially with new kind of new regulatory detail that I think has slowed some of that pace. We also estimate that about 500 SPACs are looking for acquisitions, and they had 2 years to do so. So as Lucille mentioned, the impact that SPACs have had on M&A has been pretty phenomenal. It's accounted for 17% of overall worldwide M&A activity in Q1, 25% of U.S. M&A. And so if you think of that as a percentage, if you think about back to the private equity boom in 2007, that was about 25% of U.S. M&A activity was driven by big ticket LBOs. Back in 2000, looking at the tech boom, and we had about 20 to 25% of activity driven by technology M&A. This year we have 25% from SPACs, we have 25% from technology basically in the US, and then depending on where you look at the SPAC boom, worldwide or US, you have this new complete asset class that has really just emerged. And so it's pretty phenomenal to see this year having all the hallmarks of the previous M&A cycles and a new development as well with this new product, which it will be really interesting to see kind of how that guidance moves forward. I think a lot of the discussions have been how effective it is as a new way to move capital, certainly in this bull market with such low interest rates for public listings. IPOs have been under scrutiny for a number of years as far as the number of IPOs compared to historical levels. Are there enough underwriters and brokers and companies to take companies public? Are companies being taken out in the M&A process before they can even get to the public markets? And so this, along with the rise of the direct listing that we've also seen over the last year or two, has really been a really interesting way to kind of view the overall market. And I think also, over the last 12 months, we've seen almost 775 public companies come into the market, both traditional IPOs and SPACs. And so, you read some of the headlines around, how busy the investment banking community is, how many deals there are. There is real data around that many of these big banks are seeing the highest record, kind of the highest level as far as number of deals, since we began tracking records. over 1,000, 1,200 deals in a quarter by M&A and capital markets. So all these things are really coming to a head on top of just the general market that we've been watching for the last 12 months. So really pretty phenomenal seeing this. I keep using the word phenomenal, but it really is something that we've never seen before in such a fast amount of time, with such an impact on many parts of the market. And obviously equities right into M&A. But it's not just SPACs that are driving equity capital markets, and you would imagine in the market activity that we've seen, and the record highs, and obviously the recovery coming from that pandemic and that V-shaped recovery that we're seeing in so many of these charts, where you get this huge decline in April and May of last year, and then just such a quick snapback. And we're seeing that across every piece of the equity capital markets as well. Also hitting an all-time record for Q1, both on a proceeds basis and on a number of deals basis, and also triple-digit percentage gains for each of the products. So IPOs, which are traditional IPOs, and also convertibles and follow-ons. We saw a good amount of activity last year, as companies sold down stakes, and there was a good amount of equity capital markets activity in the kind of the follow-on space as a result of some kind of big major holdings moving hands from a follow-on perspective. But some of the all-time records as far as the number of companies that were taking advantage of equity products as well as convertible bond products, kind of really driving kind of a level of fees that we haven't seen before. And then this chart obviously not including SPACs, which just adds a tremendous extra level of detail and work and revenue associated with that as well. I think we have a poll around the ECM world and SPACs. It is such a hot topic, and one that we spend a lot of our time crunching numbers and looking at those details. So over to you, Georgia.
Thanks, Matt. That's right. So we thought we'd put the question to the audience here on what level do we expect the SPAC trend to continue to drive ECM during the remainder of 2021? Do we think it'll return to first quarter levels after its a halt in activity in April? Do you think it'll be smaller but still significant, or do we think it will be a dramatic decline from recent activity? Just give it another second or two. I can see people are entering responses. Okay. Smaller but significant seems to be the overriding answer there. And I'll pass back to you, Matt, because you're going to dig deeper into some more capital markets themes.
Sure. Yeah, no, it seems like the consensus there for a new kind of band of SPAC activity, and interesting, just like we saw after the private equity, kind of 2007 and 8, we obviously saw the number of private equity firms kind of diminish as far as the numbers that were in the market, and you might see that as well in SPACs, where some of those prolific issuers continue because they have a track record and success, and some of the biggest SPACs out there still have not found any acquisitions. So there's still a lot of intrigue in this space. But over to the debt capital market side of things, which was, one of the huge stories of 2020, with just the unbelievable impact of the corporate bond market, which I think many of us who've been watching this market, have seen this kind of increasing trajectory over, really the last decade of, the impact that the corporate bond market has had on just kind of general financing activity, and a very nice slow trajectory, but every year kind of broke a new record in the global and the U.S. investment grade market. And then, last year with, all of the kind of, demand certainly from many issuers who needed to come to the market to continue operations and build out obviously liquidity and that level of detail, as well as the moves from central banks around the world. We saw that all-time record quarter that you see on the right-hand side of your screen, more than $3 trillion globally across all of the different product types. But also interesting to see, which was contributing to it, right? There's the corporate bond, investment grade corporate, high yield corporate, and agency and sovereign. As you look over history, you can see only one time really on record where agencies and sovereigns have surpassed corporates, and that was in 2009 during the depths of the financial crisis. But this huge spike in corporate activity where issuers were needed to, and two, because it was just a great opportunity to be in that corporate bond market. So we've seen a bit of a pullback this year, so down 5% globally from an investment-grade corporate bond perspective. But from a high-yield perspective, we are also seeing an all-time record as many companies are looking at that high-yield space, which, comparatively, it's not overly high because of where interest rates are. But the profile of companies around the world in that high-yield space, we are seeing an all-time record globally for high-yield and in the U.S. as well as agency and sovereigns, where you see, a big spike where a lot of agencies and sovereigns have come into the market, to fund, many activities, particularly around pandemic relief. And that brings us into the sustainable finance category, which has been one of the fastest growing overall, markets over the past, I would say the last, 4 quarters or so. And a lot of that, again, driven by the need for the agency and sovereign community to come in and tap these markets for some of these brand new products. The green bond product, which is, you can see on the right-hand side in that teal color, has been around the longest, the most mature. So it's been around since 2015, and it's continued to grow and become a more general asset class. But we're seeing more and more companies take a look at the green bond market, where we saw an all-time record in Q1 of 2021. But the sustainability bonds as well as social bonds have also come into major play from investors as well as companies, looking at a more broad definition of the bond use of proceeds, looking at things like obviously the green purposes, but also diversity and inclusion, racial equity, racial equalities, and other uses within that sustainable category, and then also within the social category as well. And so we are seeing this new burgeoning asset class account for about 12% of overall debt capital markets, which is an all-time record. And we're also seeing all-time records continue to break as more and more issuers come into the space. And many of the banks around the world are starting to organize their deal teams as far as coverage, as well as some of these products to really focus on this as a very large growing segment of the bond market. And we're also seeing that move into other markets as well.
Thanks, Matt. Thanks, Lucille. This is some really great analysis here, and particularly interesting to see the recent trends in sustainable finance, which obviously the pandemic has brought into sharper focus with the banking and the broader corporate community. Just a reminder, if anyone has a question, to please submit these through the Q&A widget. And if we don't get through them all here, we will make sure to get back to you with an answer following the session. I might start off with a question for Matt, which is on his last slide on sustainable finance. What trends are we seeing, Matt, in sustainable finance for ECM and M&A?
Yeah, great. There's a broad collection of activity happening across a sustainable world. Obviously, the bond market is the largest and most mature, as I mentioned, but there are a number of companies that are coming into the space either because they've gone public and are now, looking at financing and M&A activity. We've also seen in the first quarter of this year, 70% of SPAC activity actually happening, 70% of sustainable M&A actually coming from SPACs, as Lucille mentioned. Lucid Motors being the largest one, but a lot of activity in the electric vehicle, solar, renewable space, where SPACs are drawing, a good amount of business combinations in that space. So we are seeing an all-time record for sustainable M&A, which was over $58 billion in announced deals in Q1. From an equity perspective, we are seeing a lot more companies coming to market, but then also we are seeing the growth of sustainable products like green convertibles and sustainable convertibles, and then also ESG and sustainable focused SPACs, which are not in our overall numbers, but certainly an area that we're looking to capture and watch more closely. So I think in general, as we move to kind of try to look at kind of what that sustainable wallet is, and can we actually identify the fee pool coming from all sustainable companies and sustainable products? Bonds obviously will lead the way, but there is a growing group of activities in the equities and the M&A side, and then also not to discount the green and ESG lending area, which also had a record quarter in the first quarter of 2021. So really a space to watch.
Yeah, absolutely, and I think we're seeing a lot of demand right now from clients of Refinitiv for ESG type data, and Matt, certainly you and your team are doing a lot of work on sustainable finance. If there is anyone on the call who does want further detail on the growing number of deals in this market, please visit refinitiv.com to download the Q1 Sustainable Finance Review. It goes into a lot more analysis in this area. Let's take a look at some of the questions that are coming in. Okay, I think this is one for Lucille. Has Brexit affected M&A in the UK this year?
Not yet. Like everywhere else, we saw a crash in the second quarter of last year, but followed by a strong rebound during the second half of 2020. And UK deal making continues at pace. I don't have year-to-date numbers, but when I ran some analysis towards the end of Q1, deals targeting UK companies were up around 50% year-to-date. And we were at a 3-year high by value. And inbound investments were really fueling this growth. The number of deal announcements was at its highest level since our records began in 1980. I noted as well that the UK currently ranks 3rd in the top M&A destinations globally this year, which is a position it's held for several years now. So it seems like the UK remains very much an attractive destination for M&A.
Okay, and we'll continue to monitor that, I guess, as as we get further and further out from Brexit. Another question this time on IB wallet share, Lucille. For the regional banks, non-bulge brackets and non-boutiques, how are they faring this year?
Yeah, I mean, that's an interesting one as well. We did definitely see and have seen, I would say, over the last 9 months, really, a real flight to some of the bulge brackets around the overall investment banking fee pool. So we're estimating that the top 5 banks, which are the top 5 big American banks, have increased their wallet share by 5.6 wallet share points in the first quarter compared to a year ago, which is one of the largest increases we've seen in recent history. And we are seeing that share being taken away from some of the U.S., European, Asian, Canadian, Japanese regional. So the names that you might imagine in in the lower tier of some of those investment banking rankings that we publish. So it is interesting to see that dynamic, particularly. I wouldn't say necessarily flight to quality, but definitely a bit of a wallet share grab going on between kind of the big banking world, which has continued to kind of move its share forward, particularly in this crisis over the past year with the pandemic. And you do see some of those year-over-year declines coming directly from some of those more U.S., European, and Asia Pacific, Japanese, kind of regional players. So something to watch for sure, and kind of tracking, whether or not those regionals can build back some of that business, or, do some of those businesses decline a bit. We've seen some of those European regional banks exiting certain businesses, making some broad changes structurally. Does some of that make its way into the M&A world, where some of the lower tier regionals become, some sort of combination? Interesting to watch there, particularly as business moves through into the post-pandemic time frame.
Okay, thank you, Matt. We have a question here on the Middle East, which I guess we haven't broken out in a lot of detail in the webinar so far. What does the deals market look like there, and what are we expecting for the rest of the year? Any thoughts?
I can take that one. So we actually published a Banking in MENA report at the end of the first quarter, which I'll see if I can get to you, Joseph. The value of deals in the Middle East and North Africa involvement are up 19% by value from last year. It was also a record quarter by number of deals. So a very strong story here, but yeah, take a look at our MENA review. This and other reports, including the Sustainable Finance review, are available to download from Refinitiv.com and also from the Deal Intel app on Refinitiv Workspace, which we've actually revamped just recently, given it a bit of a facelift and added a lot of content on there. So take a look, lots of great insight there.
Thanks, Lucille. Another question we have had come in. What kind of growth trajectory are we expecting for sustainable bonds, given they're already at all-time highs? Do we have a sense of the key drivers behind the trend here?
I think it's a little bit hard to say. I think the and our look at the overall sustainable category is a combination of the sustainable products, which are again those green, sustainability, and social bonds, but also companies. So as more and more companies kind of move into this space, obviously their financing will be captured. I think there is also a lot of people watching to see how this first round of this this larger set of more broad kind of green and sustainable products are certainly how the proceeds are used. Some of the banks are actually who are underwriting these deals are actually kind of detailing some of their own commitments, obviously, and where that work is being done. I think if you think about some of the big ones that we saw in the latter half of the year, like Alphabet, for example, or Whirlpool just coming just recently this week, I think people will be looking to see kind of is there a story to say that the proceeds that were raised here, what did it actually do? What was the sustainable output? What was the outcome there? And then, that will build that story. I think, as you said, Georgia, we're hearing so many questions around ESG and sustainability in all of our client conversations. I imagine that most of the investment banking and capital markets community is also hearing that. And so this is probably a new era of this asset class. And so, a lot of new players coming into the market, a lot of people obviously wanting to, kind of get into that market from an investment perspective. I think there will be, this next phase, which will be, also probably showing some of the use of the proceeds, what that capital did, from an overall perspective for the company or for their community. And then, being able to put some metrics around that as well, which I think is going to be a key driver of the future of the asset class. And I think, an important one as well.
Yeah, I guess just referring to that, we will put up a bit of a survey at the end of this, which will be really quick and decide on future themes. It'll be interesting to see if a webinar on sustainable finance would be of interest to the community, and whether we could go into a lot more detail there. Certainly. Another question that's come through is asking for Matt and Lucille your perspective and thoughts on where the SPAC market is going.
Such a great question. I think people are definitely waiting to see. I think the guidance that will come out, and I've been obviously been trying to read as much as possible around it and see any guidance or commentary that comes through. But I think right now people are I think obviously just by the data on pause. We have a very large backlog of deals that could come through. And I think, if there needs to be some adjusted, guidance or financials or some sort of, kind of disclosure that needs to probably accompany those to make people or, obviously the regulators more comfortable, that will have to come into play. I think, the outcome of the M&A combinations and what happens to those transactions, as they move through after the SPAC makes the acquisition and that deal closes and the new target company is a public company, what is the price performance? What does that company look like going forward? We have a couple of examples, obviously of some large transactions that we can follow, and I think many more to come. So again, I think this is definitely a dramatic pause, but I think I would expect to see, particularly because of how effective the capital raising and the M&A activity has been for many, that we would want to come back and do it in the way that everyone feels comfortable from a regulation perspective and kind of an overall disclosure perspective. So I think more to come in the space. And as I said, so many more. We estimate about 500 are now out looking for acquisitions. What does that do necessarily, to valuations, and how does that make its way through the M&A world? I think there'll be a lot of focus on the M&A side as well as the listing side for the rest of this year.
Thanks, Matt. And I guess there's one last question that we might cover before we sort of need to wrap up, which is around the number of announced M&A by region. What's the percentage that have closed versus those that have been withdrawn? Do we have any stats on that, or we can get back to Suzanne?
I think we'll have to get back to Suzanne on that. I don't have the stats to hand. I see that she's also mentioned failed deals as well. I did run a little bit of analysis on withdrawn M&A at the end of, just before the quarter closed. And we were seeing that withdrawn M&A is up 77% from the first quarter of 2020. And it was the highest first quarter total for withdrawn M&A since the first quarter of 2018. And that the value of deals withdrawn during January was the highest monthly total in 20 months. So a little bit on failed deals, but perhaps we can get back to Suzanne with the ratios of closed versus failed.
Yeah, thanks for
we did see a little bit of that, kind of top of the market announcements and withdrawals very quickly. Some of that in January and February that Lucille and I certainly were watching, where deals were announced and then pulled quite quickly. We saw the French-Canadian supermarket deal, kind of announced, and then pulled back quite quickly. So you do see that a little bit, certainly during market highs, and obviously we are at one right now as far as the consolidation view. So some people obviously, some companies feeling a little bit, confident to come out with an unsolicited bid, and then obviously things happen quite quickly. So that was a hallmark of the first quarter, which obviously showed through in Lucille's numbers there as well.
Great. We might wrap up there. We're getting close to time. We appreciate everybody putting aside the time to join us today. So thank you very much for dialing in and for your engagement during this webinar. We'll be reaching out with the recording and the slides, and we'll pick up any questions that we didn't get around to answering. Once again, please refer to the resources that are available to the right of your screen and to refinitiv.com for more information on sustainable finance or any of the other topics that we covered today. And if you could just take 10 seconds to fill out the survey that's up on your screen once we close out here, when we will look forward to seeing you on the next webinar. Thank you, everyone, and have a great rest of your day.